All right. Hey, everyone. Open up the room a little bit early so we can get things going. So my name's Kristen. I'm going to be hosting this blab for you. I kind of oversee Josh and Tyson's social efforts. So just making sure they're answering all your questions and reaching out to you guys. So hello. Change of plans. So Josh did have a family emergency, so just keep him in your thoughts. He won't be able to join us today, but Tyson will still be here. He should be buzzing in soon. So pretty excited. This is the first blab we're having. Have any of you guys used this platform before? Are you familiar with it? Are you able to hear me? Is everything working okay? Just let me know in the little chat box. It should be to your right if you're on your desktop, and then if you are on your mobile device, it'll be at the bottom. It'll say add your 2 cents. So just test it out. And we are recording this in case you're not able to join us live. It should be available on Josh and Tyson's social pages, so you can check that out. All right, so I see we have 11 people in here. It's pretty exciting. Are you guys MTI students already, or are we just Forex traders, equities traders? Are you even traders at all? What's going on? I want to know a little bit more about you guys. Okay, let's see. So if you are wondering what we're going to be talking about, we are going to get to know Tyson a little bit better if you don't know him already. Get to know a little bit more of his background story, why he was a Forex trader, what provoked him to start trading. Okay, awesome. Got our first comment. So Richard says he is a successful demo trader. Awesome. How long have you been doing that for? Well, I'm waiting to hear back from you. So we're going to be talking with Tyson to see how he started trading, how he became successful, what he's doing now. And of course, as Richard probably knows, and how most of you know, if you're already traders, we do have FOMC coming up tomorrow, which is going to be a pretty big announcement. Okay, so Richard's been trading for years on and off. That's great. So you do it on the side? Is everyone familiar with the software? I know this is a little bit new. I mean, this is my first time using Blab. So we have the chat box on the bottom. We have the chat box to the side. You can also buzz in. You guys should be able to see that there's a seat, and you can actually buzz in so I can see you, and we can have a more one-on-one conversation. I mean, obviously, everyone's going to be able to join in and hear and put their input. Just waiting for Tyson to come on in as well. Where's everyone joining us from? We're here in Lake Mary, Florida, which is usually like the beautiful sunshine state. But if you take a look outside the window right now, you can tell it's looking a little gloomy. So we're just kind of waiting for that cold weather for the winter. It's been really hot lately. I don't know how I feel about that. You know, it's like the holiday season. I want it to be a little colder. All right, let's see. I'm going to type in here to see if Tyson can see my chat box. All right. All right, I'll be right back. I'm going to minimize this just to double check with Tyson to see where he's at right now. Should not close. So let's give this a whirl. Okay. All right. Awesome. He's coming in. Okay. Good.
Hey, Kristen. How are you? Sorry for being a little late. I had to download.
Hey! Oh gosh, I was getting so lonely over here.
Here, let me adjust this. So we have. Okay. I heard you talking about the weather in Lake Mary. I'm in Minnesota, and it's just gorgeous in Minnesota, which is abnormal. Let me adjust this so it's not blaring. Give me a second.
Yeah.
All right.
All right, perfect. Everyone's getting excited that you're here. So everyone's aware Josh is unable to make it right now. Everyone keep them in your thoughts. And we're going to keep this going. We have a lot to talk about. So I'm excited. Yeah. This is our first time doing this.
Awesome. Hello, everyone. And yeah, let's get kicked off. Awesome.
Yeah. All right. So I already mentioned to them, we have some things to talk about. FOMC is coming up tomorrow. That's pretty huge. But there's probably some people in here that are unfamiliar with trading or just starting to learn. So I think it'd be only right to kind of get to know you a little bit better.
Yeah, give me a second. I'm adjusting some of my screens here. Sorry about that.
No, you're fine.
Yeah, so my name is Tyson Clayton, Market Trader Institute's product expert. I've been trading and investing for 16 and a half years or so. I've kind of experienced what I say is almost everything in this business. There's a little bit of truth to that, but obviously you still continuously learn in this business. But I've traded every asset class. I still very actively trade options, and currencies are my biggest asset class that I trade. But I trade buyings, as you've mentioned, some very exciting things happening tomorrow. In fact, I'm excited for everybody that's here because tomorrow, I think, could potentially in history, if we look back on what may happen tomorrow, it could be a very, very important day and kind of structure where the overall market, not just the currency markets, but where the overall maybe global equity markets and U.S. stock markets especially goes for the medium term, maybe even long term. So we'll talk a little bit about that today too. So yeah, I've been trading for a long time. I love this business. Can everybody hear me okay?
I can hear you fine, but your video is a little choppy at some points.
Oh, yes. Is it? It's probably because I tend to talk really fast and move fast. I have the same issues sometimes in my my webinars. I'll try to slow down. Not sure if there's a way.
It's when you start moving really fast that it will get a tad choppy.
Yeah, let me see if I can close down.
Okay, Richard can hear you fine, so that is a good sign.
Okay. I think the most important thing is if you can hear me okay, then we should be good. But yeah, I'm excited because we have some really, really important things to talk about. The focal point, over the next hour is going to be around the FOMC and really how I'm playing it and kind of what I'm planning on doing. And really, as a trader, what I try not to do is I try not to guess and get my own opinions involved in my trades. Every time I have done that historically, because I can be an opinionated person, but every time I've done that and I've traded off of my emotions and what I think more than the charts, I end up making mistakes. So it's really based on technicals, and it's really based on a systematic, very logical way to trade using Fibonacci's, using where we're at in sequences, trend, making sure that my risk management is in place. But there's some really exciting things happening in the markets right now that I think are going to offer people a tremendous amount of making money. But here's the thing: there's two things in the market. It's one about making money, but then it's also about capital preservation. You got to understand how to preserve capital and manage your risk too. So
absolutely.
Yeah.
So I mean, you talk about trading. You said you've done Forex, you've done options. How long have you been trading for?
Yeah, I've been trading for 16 and a half years about. It seems like I've been trading forever, and I'm still a fairly young guy, but I started trading real early in my life, and I didn't grow up in the business. I didn't grow up in trading and investing. I'm originally from Iowa. My parents were very hardworking, blue collar type of people, which is great. So they didn't really invest. They didn't really trade. They didn't really pay attention to the markets all that much. And when I was growing up, I always would I'd turn on some financial networks and I'd watch these people throwing papers around and all that in the pits. And man,
Tyson, can you hear me okay? Because your screen
really
is black.
Exciting. I want to do that someday. I had no kids started trading a little bit. I thought I wanted to be a stockbroker until I realized what a stockbroker does. We'll talk a little bit about that maybe today if we have some time. But I've been trading. So I started out in stocks. Would love to say that I started out and I became this just great success right away. That's not the case. I say this, if you've ever attended some of my webinars, I've made every mistake you can make in this business. And I say this all the time. There's only one of two ways to learn how to trade and invest properly. And it takes time, but you're either going to pay a substantial amount in market tuition, or you're going to pay, an educational tuition and do it the professional way and learn from the mistakes of the professionals, like learn from me. So I started in stocks, went to futures for the wrong reasons because I could get more margin on futures, and then ended up focusing a lot on currencies. And so from that point, essentially just kind of traded everything. But yeah, I mean, it's been a ride, and the reason why I love doing what I do, which is a full-time trader and Market Traders Institute product expert. The reason why I love that is because I've realized there's a lot that I'm not good at in life, but I'm a pretty good trader, and I also believe that it's my responsibility. I think I've been blessed in this business where I think I have a responsibility to give back and to teach and to help and guide people. So, 16 years, done it all, seen a lot of things. I traded very heavily during what's called the Japanese yen carry trade unwind in 2008, 2009. And we'll talk a little bit about that today because some of the same things might be
that's pretty exciting. So I know everyone here at MTI, we're really glad to have you. We do have a question from Richard. How long before you were successful in trading?
Yeah, great question. It was probably, it was until I woke up and realized that, I didn't know everything. I had done some other things in life. Things had come fairly easy to me up until the point I started really actively trading. So I looked at the markets much the same as a lot of things in life, where I thought, it can't be that hard. I can do this on my own, and I don't need education. I can just go out and, read some books. There are some really good books, but I thought I could go out and read some books. I can just, learn how to do it. And I think maybe that's true in a lot of things in life, but there are so many things involved in trading and investing that I'm not sure if people are prepared for or are aware of when they're learning how to trade. And the emotional side is a big part of that. So really, once I woke up and was kind of tired of getting in my own way, and I decided that I needed some proper education, I needed to find a mentor, I started becoming successful. And that wasn't until about 3.5 to 4 years into my trading career. With that said, it doesn't have to take that long. It took that long simply because I was way too stubborn, too arrogant to realize that, wait a minute, I should probably try to do this professionally. I say all the time that this business is very, very similar to any other business out there, which is if you want to learn how to do something, and I always use the analogy of I want to, fix a clogged sink, right? Let's say I want to, fix my car. I'm tired of taking it to the mechanic and I want to save some money and fix my car. Well, then the way to learn that is to watch professionals do it, get mentored by professionals, and then over time start to mimic what they do. And this is a phenomenal business, and it is that type of business. Now, I can't be I knew this early. I knew I would never be Steve Jobs, and I can't be an Elon Musk. I don't think in that way, but I can learn patterns. I can learn discipline. And so once I realized that and I kind of got out of my own way, then the success started to come. But the third leg in this journey of becoming a successful trader, I talked about this with a group that I was with earlier today. We have Market Traders Institute for any of those that aren't aware of this. We do a lot of client webinars, and we do a great job of guiding and helping students. And I was in a webinar earlier this morning, and I was talking about kind of the third leg of the trading journey. First leg is belief, right? You got to believe that you can do it. The second leg is, getting that foundation of an education and really fine-tuning your skills and getting a logical way to manage risk and enter. And then the third leg, and this is the toughest leg, and it's almost one of those legs that you have to just go through the markets to learn it, but it's the emotional side of the business, and it's the greed, and it's the fear, and it's the getting over the fact that you're going to have losses. You're going to be wrong sometimes, and it's getting over that, and that's the hardest part. And the only way that I know of personally to get over that, even though I think that I'm a master of my own emotions, and I'm fine. The reality is the biggest and best way to get over that is to learn from those that have already gone through it and try to avoid the obstacles and the traps that they fell into. And so,
absolutely, just like with anything in life. So, I totally agree. Yeah. So, hopefully, everyone gets a better idea of how long you've been trading for, why you started trading. By the way, how would you classify your trading style?
Yeah, great question. I kind of have a mix of styles. It depends on kind of what's going on. Like, so for tomorrow, I'm expecting some very large moves, and I'm actually expecting some very large moves over the medium term. So not just immediately. I think we're going to immediately see a very large move in multiple currency pairs and in the market. But then I think that it's just going to be a start of very high volatility. You've started to hear, if you watch any financial networks and different things like that, you kind of heard a few months ago when we kind of got that little bit of a crack. Well, it was a real decent sell-off in the U.S. stock market, really worldwide. When the Dow was down, opened down 1,000 points, you started hearing the buzzword of a volatility. And, traders love volatility. We really do, as long as we're prepared for it. And you're not over-leveraged when you go through volatile markets. So, I'm more of a swing trader. If I had to define myself as one, I'm more of a swing trader. But I'll trade around core positions. So I'll have a longer term view, like on the euro pound. I've got a long term bullish position on it. And so I'll trade around that. So I'll have a long term position, and then I'll kind of swing trade around that. But more of a position or swing trader doesn't mean I won't take some day trades in my sessions that I put on. I try to structure, a lot of times I structure multi-leg trades, meaning if I enter at, this price, there might be multiple. You can take your target here. Like, for example, in the Aussie CAD today, you could have hit a day trading target that I set up yesterday. Then there's a lower swing trading target also. But you got to understand the difference between those two. You're going to manage risk differently too, and you're going to size those positions differently. So if I'm a swing trader and I've got a 150 pip stop, my position size on that is going to be much different than if I'm a day trader and I've got a 30 pip stop. And it's very important. Way too many traders they kind of trade a standard lot size, and you shouldn't do that. You should make sure the way that you should manage risk is obviously technically understand what's going on in the charts, but then make sure you understand the dollar amount, right? The actual, the size of money that you're willing to risk. And there's risk in this business. the dollar amount you're willing to risk per trade, and then back into the size from that point. Very, very important. And that's how traders can be, right, essentially. I mean, I showed this morning how we could have a trade that's might only, hit its target 1 out of 4 trades. Now, a trader hears that, and some people out there that are listening might hear that, and they might think, well, geez, that doesn't sound that good. Well, it can be great as long as you're managing risk. And that one time that you're profitable over those 3, in this one example, this one trade could make 500 pips, whereas the 3 stops might only, be down a total of 125 to 150 pips. So, but anyway, long story short, I guess, more of a position swing trader, but I'll add some day trades.
Okay, well, that just shows, I mean, what a well-versed trader you are, being able to adapt to different styles. I mean, definitely know your stuff. Yep.
Yeah.
All right, so before we head into FOMC, because I know that's the big topic of discussion, I do want to open up for some questions. If you guys are using your mobile device, you'll be able to see the chat box on the bottom where you can add your 2 cents. And if you're on your desktop, you should be seen to your right. So you guys can type in, or you can actually call in. If you see the little empty screen, you have the ability to give us a call and hop in with us and kind of join the discussion. I mean, we definitely want to hear from other traders or people who want to eventually become traders. So this is for you guys to take advantage of.
Yeah, and I'm absolutely just a couple on top of that. I'm an open book. I mean, there are no questions off limit to me. I've been in this business long enough where I don't get offended easily, and if I don't have the answer, I'll say I don't have the answer. So
there you go. We got that little disclaimer.
And if you guys keep seeing me look over to my right, if you see me looking over to my right, I've got my charts up over there. So that's what I keep glancing at.
What are you watching right now?
So, well, my current positions are, I've got a longer term positions. I've got a long in the Aussie dollar. I'll talk about that in a little bit when we get deeper into the FOMC. I've got a longer term position in the New Zealand dollar, very, very highly correlated to the Aussie dollar. It's a little bit of an inflationary theme. Those are longer term positions, but positions that I actually took within the last day. I'm short in the New Zealand CAD. That was looking pretty nice. I've got a target all the way down to 89, so it's got, I think about 350 pips to the downside. I got short at 93. Short in the Aussie CAD. That one's got some great profit potential. It did hit one target today, but I think it's moving all the way down to about 96, sitting at 98.50, so 250 pips worth of profit in that one. And these all could happen. So these are technically swing trades, short-term swing trades, but these could all, because of the big news, these could literally happen these could be day trades, right? They probably won't happen until the announcement tomorrow, but they're looking really nice. I also have one of the best trades I'm in right now, other than like the longer term positions, is short in the pound. Actually, a great lesson on discipline, and because for target trading students at Market Trader Institute, there's a page that we created called MTI Target Traders, and I'm a huge fan of the target trading course that MTI puts on because it fits kind of really right within my style. But I posted a couple trades on Sunday on that page, and there were shorts in the pound CAD. And actually, I'm sorry, on Friday, I posted a short in the pound CAD. But here was the test of discipline. Last week, I had taken 2 small stops in the pound CAD looking because it was getting overbought. And so I was looking for this move that's now finally happening. And so 2 small stops. So one of the big lessons that I talked about today in the session was, do you have the discipline if the charts and the trade sets up and the bias is still to the downside because you've taken 2 stops? Do you still have the discipline to push the button again? And the answer hopefully is yes. Inevitably, unfortunately, for a lot of new traders, they think it's yes, but when time, push comes to shove and it's time to push that button, sometimes they take a step back and they don't. And that's the trade that you end up looking at again in a couple of days, and it works out really well. And the only way to get over that is education. Is to you're hearing from a professional trader now. You join, you watch us trade, and you just learn it. So, but yeah, short the pound CAD, that was looking good, and then I'm also looking for long opportunity.
Nice. I'm sure you'll keep everyone updated on that on your Facebook page. So I said I'm sure you'll keep everyone up to date with that on your Facebook page. Yeah.
For sure. Yeah.
Awesome.
Yeah, absolutely.
Well, so let's get right into it. Again, I want to remind you guys, you are more than welcome to call in so you can join in on the conversation. The square will be empty and you can just hit the button and it will connect you. But while we're waiting for that, let's just get right into FOMC. So it's going down tomorrow. It's a huge deal. We're hearing about it all over the news, all over the blogs. For some of our newbies in here, what is FOMC? Let's just start it off with that.
So it's the Fed. It's the Fed meeting essentially. It's an interest rate meeting. The Fed is going to meet. They're going to give their update on. The Fed really has a dual mandate, and the dual mandate is based around employment or unemployment. So how robust the jobs market is and inflation, and they go kind of hand in hand. Because a robust jobs market essentially, economics 101 kind of says. The way the market should work is kind of what the Fed tried to do, and it worked a little bit. But what we should do is if we go into a recession, we should ease regulations, which really didn't happen, but we should ease regulations, increase money supply, so lower rates make it easier for individuals, businesses to access capital, because if you make it easier for me or individuals to access capital, then I'm going to access that capital. I'm going to put it to work. And then you want low rates, right? So make it easy to access capital and make the rates really low, because when you have low rates, it discourages saving, right? So if I'm not getting paid anything on my dollars, or really, anything, and we're just going to talk about the dollar for now. If I'm not getting paid to have, a bunch of money sitting in my bank, then I'm going to be forced. If I believe that there's going to be any inflation in the future, I'm going to be forced to take on risk, right? So I'm going to be forced into risk assets. And that's a good thing, right? So it's good until it gets to a point of euphoria, and then it gets overdone. And then, that's when, anxiety starts to set in, and it's just a whole, emotional cycle. But that's where we're at. So it's essentially just the Fed meeting, giving an update on the interest rates. The idea or the thought is, that they're going to raise, and they're going to raise an eighth of a point is what the projections are. So they're going to go from a quarter Fed funds rate 0.375. And so I've got my opinions on that. We'll talk about that a lot in this session here.
Great. All right. So that was a great explanation. Hopefully that answered a couple of questions that some people have. And how do you see the FOMC affecting the current markets right now, or tomorrow, I should say?
Yeah, I see it. I see it affecting the markets in a very, very bad way eventually, and potentially. And so I say that. So I'm in the United States, right? So I'm going to talk a little bit about, and I think it's important because this does correlate with currencies. Now we're here to talk about my positions and how I'm positioned in currencies. And ultimately, it's going to be a currency-led type of move, but it's going to have a spillover effect, a major spillover effect, and other risk assets such as U.S. stock market, housing market again, et cetera. And so I guess let me kind of go back for a second. The FOMC has a dual mandate. As I said, they have a mandate to, do all they can to help stimulate a robust jobs market, right? That, for the most part, is fairly easy money policy, but it's not always. And really, the dual mandate doesn't even make sense. What makes more sense is they really have one mandate, which is currency stability. And the thing that makes currencies unstable is one of two things. It's either inflation or deflation, right? So, and all their policy at the core and at the surface of everything they do needs to be or should be based around those two things, either deflation or inflation. If we're in a deflationary environment, then we need to give the market more supply. We need to make regulations less. We need to make, discourage saving, right? We need to spark the economy. And therefore, if we spark the economy, companies start to invest in new products. Yep. They have to hire new people, which means the jobs market gets good. There's less workers out there looking for work. So therefore, to get top talent, you have to raise incomes, and that's awesome, right? And then you get to a point when that happens, you get to a point where that's in a deflationary environment. Then you hit a floor, and that's when inflation starts to kick up really aggressively, because now the jobs market's really good. Everybody's getting paid a bunch of money, and cost of goods can, the demand a higher price because people have more income, and then the cost of goods and inflation goes up. And that's when they should start raising. But that's not what's happening. And so right now, I actually believe they're going to raise tomorrow. And I think it's going to be a huge mistake. And I think they're going to raise. I think they should have, let me say this. I think they should have raised 3 years ago. And so they're completely behind the eight ball right now. And I think what's going to happen is they're going to raise based on public opinion, not based on what they should be raising on, which is inflationary pressures or future inflationary pressures. You look at oil right now, and there is absolutely no projected global inflation. And with that, why in the world would a world economy or an economy Fed be raising interest rates right now with no inflation? The only reason is because the market says we've been too low for too long. And I think that's a big mistake. And I think it's going to cause some potentially catastrophic moves in a lot of what they're doing, and those that have education, phenomenal opportunity. I'll tell you kind of how I think it's going to start. So, so what I think is going to happen, well, first of all, let me kind of go back again. 2008, 2009, we got to remember, and I'm not a fear monger, right? So I'm not one that wants to beat the fear drum unless it's warranted, right? Unless it makes sense. And I do think that it does make sense to kind of start beating a fear drum a little bit when it comes to the markets. And because if we think about where we're at, and again, I'm going to talk a little stocks here, but I'm going to tie it back into why it matters in the currency world. But if we're talking about the stock market, the U.S. stock market, right, because we're talking about the U.S. Fed, U.S. stock market is sitting near all-time highs with volatility, which is the fear gauge, sitting at relatively meaning, a historic 20-year historical average, relatively low level. And it's coming off of very, very low levels. And so that is a very bad makeup for aggressive bullish positions, because the risk is that it's just a matter of time before fear, anxiety starts to kick in for whatever reason, geopolitically or financially, whatever it might be, and people start to look to safety. And so we've got a makeup right now where we've got extremely overbought markets, in my opinion, stock markets, U.S. stock market, tied into very low volatility rates. And the main reasons why we've gotten the big rally in the stock market we have gotten isn't based on something that's, fundamentally strong. It has been 100% based on cheap money, and the Fed has done what they wanted to do. I don't think they realize what monster they created, though. Their goal was to inflate risk assets, right? That's what they wanted to do. But the proper risk assets you want to inflate is backed by higher incomes. The incomes have been completely stagnant. Yeah, we have a decent jobs market for what we see, but incomes have been stagnant, and so therefore, what's going on right now is a carried interest trade, and the carry trade, unfortunately, I believe is the main culprit of the carry trade right now. I believe is the U.S. stock market, and what they've done is they've inflated risk assets such as the U.S. stock market and the housing market to a point of I think it's unsustainable, and they've done that because they made borrowing costs really low. Regulations in the housing market has made it, so it's a little more difficult to get a house, but borrowing costs are very, very low. And they've also made borrowing costs for the Fed, right? The Fed funds rate really low, which means that these big corporations and these brokers can borrow their money from the Fed for very low interest rates, which means they can pass that low interest rate on to consumers, onto you and myself. And so in my brokerage account, I can use margin and I can go long stocks and use margin. And it makes sense for me to leverage up my long positions because, first of all, it makes sense for me to use every single dollar of cash I have to be long something other than the dollar, because I'm not getting paid anything the dollar. So I need to sell my dollars. This is over the last 7 years, right? I need to do everything I can to sell my dollars and buy something that's going to give me a higher return. And so, what's made sense is the U.S. stock market. Get the S&P 500, paying an average of a 2.5% dividend. Well, think about this. If I had to pay, let's say I had to pay a 1% margin rate. Well, if I'm paying a 1% margin rate, and that's just on my margin, not on my cash, I can take that and I can arbitrage that and just buy the S&P 500 and get 2.5%. Same thing's happened in the housing market. Housing, has a historical price or appreciation of about 5 to 6% historically. Well, you have a natural arbitrage going on right now where, if you go out and get a 30-year mortgage, I can go out and get a 30-year rate at, let's say 3.5%. I've got a natural arbitrage as long as I, quote unquote, as long as I'm willing to hold it long enough, right? I got hey, this is like minting money. Why not just go out there and buy a house at 3.5%? I'm going to make 5% long term. It's an arbitrage. It's genius. And that's what's happening right now. And as they raise rates, that trade is going to come to an end. And that trade should eventually come to an end once the market becomes overheated. Once we get to a point of massive euphoria, hyperinflation, and we're not even close to there. So they're going to be raising at a very bad time, the wrong time. It's going to take the carry trade, and it's going to wipe it out, and it's going to be pretty detrimental to stock positions, in my opinion.
And what about Forex positions?
Yeah, and it all ties back to Forex. Because it all has to do with borrowing something and then taking what you borrowed, dollars, and selling those dollars so I can buy something else, right? So the same thing happens in the currency world. In 2008, 2009, there was the reason why we went through the financial collapse we did was because of over speculation and massive leverage, much like the same thing that's going to bring us into the next collapse. And what was happening at the time is it was kind of exactly the opposite type of carry trade that's happening. What was happening at the time is you had a lot of world feds at very high interest rates. For example, you had like Australia at like 5.5%. They're quote unquote equivalent to the Fed funds rate. You had New Zealand at 5.5%, 6%, CAD pretty high. And so what people were doing at that time is the Japanese yen has been in decades and decades long worth of very low interest rates. So people were going short, or basically shorting the Japanese yen, buying it and then selling it against like the Australian dollar, the New Zealand dollar, and doing what's called the carry trade in the currencies. And you would get a positive interest swap every day from that. So you'd basically just be able to sit on a position, and you could use leverage for it. You could sit on a position and do an arbitrage and just make money as long as the currency doesn't do anything. At the peak in 2008, 2009, there was about $4 trillion wrapped up in the Japanese yen carry trade. And so what happened is that the world banks, and I don't think these guys were caught off guard. I think they actually were prepared for this. But what happened was I don't think anybody was all that prepared for the entire world to go through a recession time. And what happens in a recession is you lose jobs, which means incomes go lower, which means deflation's maybe going to come in, which means you need stimulation. You need to make sure that everybody started lowering interest rates at the same time, which then caused major panic in the Japanese yen carry trade. Because now what it did is it caused people to have interest rate or currency risk. When before they just thought I could just go long the pound yen and collect my positive interest rate. And it doesn't matter if it just stays still, I make money. Well, once the world started to lower interest rates, that's when it caused more actual currency risk. Well, we've got the exact opposite happening right now in that then we got overheated. in a good economy that was overheated. Right now, we're in a okay economy that's not even anywhere close to being overheated. And we're thinking about raising interest rates. And the problem is the carry trade is going on right now. And what people are doing is they're shorting dollars or borrowing dollars to go long risk assets. And the biggest culprits of the risk assets back in 2007, 2008, the biggest culprits were the Japanese yen. You would borrow Australian or British pound to go short or to go against the Japanese yen. Well, this time it's the Japanese yen and the US dollar to go along, such as the stock market, housing market, different things like that. So this unwind is actually, I believe, going to affect Main Street more than 2000. It has the potential to affect Main Street even more than 2008, 2009 did, because the carry trade for 9 years has been do everything you can to sell your dollars, right? Why in the world would you want to hold anything, the dollar, because you're not getting paid anything. So you need to do everything you possibly can to sell those dollars and buy something else. And that's what's going to happen. As they raise interest rates, it's now going to cause a fear trade, essentially. It's going to cause people to think, now don't have as much reason. I still have a decent reason to sell dollars because it's not like we're at a high interest rate, but I don't have as much of a reason to sell my dollars now because now the interest rates are a little higher, right? So now I'm getting paid a little more to hold my dollars. So maybe, and think about this, I've made a really nice return on my risk positions on my, let's say I borrowed money to go long stock market, got a nice return on that. So, you know what, I'm getting paid a little bit now. I'm going to sell my stock market position and go into a little more safety. And that's going to be the biggest issue, is the fact that people are, I think this is going to be it's going to be a flight to safety, and it's going to be a flight to safety that turns into a panic position. And the reason it's going to turn into a panic is because huge levels of margin along the stock market. People borrowing money to go long the stock market, borrowing money to go long, currency pairs, different things like that. And there's going to be a big unwind, and it's going to end very, very bad. And so I am actually thinking that the Fed is going to raise tomorrow. That's my opinion. I'm going to play it as if I'm not going to just guess, right? So whatever they do, we're going to, for Market Trader Institute students, we're going to do some special things. I believe we're going to have some special sessions tomorrow, depending on what they do. I'm not 100% sure, but depending on what they do, I've been told to be on standby, so we can put on some special sessions, depending on what they do. And I'm going to let the technicals tell me what to do on a short-term basis. But long-term, I see us having a very big capitulation move down. I think it's going to be counterintuitive. It's going to be short-term bullish the dollar, but then it's going to be long-term bearish because I think the dollar is going to strengthen because the rates just went up, and it makes sense to strengthen and allow the institutions to get out of their long positions. And then it's going to cause a capitulation move, sell off down, and they're going to have to start lowering rates again. Just real quick on that, you got to remember when you hear these talking heads on TV, remember what they're really what they have. They have a bunch of long positions, right? And so if I have a big long position, let's say in stock XYZ, and I'm like, ooh, I'm a little worried about, I've got a really nice gain in it, and I'm a little worried about where we're at, and I'm a little unsure. Why not come on TV and talk my book and really pump it up? Because I need a bunch of buyers to sell my position, right? Mm-hmm. I can't sell it if I don't have a bunch of buyers. So I'm going to transfer that risk onto the public. So just be aware of that, everybody. So yeah, I see a major sell-off coming. A huge rally in the Japanese yen, because really what's happening is kind of a circle trade, really. What's happening is the consumer is going short the dollar, right? They're borrowing dollars, they're buying the stock market, buying housing, buying other things, Australian dollar, New Zealand, all that. But what the institutions are doing, the institutions are actually arbitraging even further against that. The institutions are still borrowing yen because the yen is even lower. So they're taking advantage of the ultimate arbitrage. And that, what's going to happen is the institutions are really going to start covering their short positions in the yen to start preparing for some of this. And that's going to cause a panic in the dollar, and the yen's going to get hugely strong in the next year, in my opinion. That's a longer term gauge.
Okay. And so for tomorrow, what pairs do you think will provide the biggest opportunity, maybe in long term, maybe in short term? What's really on your radar right now so that traders can take, actionable steps to kind of get in on this opportunity?
Yep, great question. So I think I'm looking at the Aussie pairs, all the Aussie pairs, a lot, and I actually think Aussie dollar is going to be one of my it's a long-term long position that I have, and it's going to be a position that I have for a while. I believe that no matter what the Fed does, I think this is important, and hopefully you guys can follow my thought process here, but no matter what the Fed does tomorrow, I think is inflationary. It's pro-inflation. And so I say that because if they raise rates early on in an interest rate rising cycle is actually really positive inflation, because the only reason why they should be raising rates technically is because they see we have inflation or they see future inflation, right? So that's the only reason why they really should raise rates. So that's actually really positive inflation. Now, we haven't seen any inflation. So if they raise rates, what the market's going to do is it's going to assume, wait a minute, the Fed might know something we don't know, and there might be inflation that they see down the road, so therefore we need to start positioning for inflation, and that's a really nice inflation. What if they don't raise rates? Why is that inflation? So raising rates is very, very pro-inflationary. Them not raising rates is very pro-inflationary too. The reason why is because it maintains the easy money policy, which allows true inflation long term. So commodity currencies are kind of my favorite type of plays right now, especially with the fact that they've been beat up so much, like the CAD. If you were kind of listening to the positions I'm in right now, and that I found today, it's short the pound New Zealand CAD, short the Aussie CAD. So the CAD's been beat up because it's a commodity currency. It's very correlated to oil, a huge part of their economy, and I think no matter what happens tomorrow, it's going to be very inflationary, and the CAD is going to rally aggressively. So my favorite two plays for tomorrow, like the ones that I'm watching the most, I think the dollar CAD is going to set up phenomenally. And again, if I had to just take a bias, I'm thinking aggressively short the dollar, long the CAD. But I'm going to let the markets do that. I know that that's a position I'm going to get into longer term, and I'm also looking at a long Aussie dollar, and that's a little counterintuitive too. Now it's important as a trader. Sometimes you've got to take a step back and realize the markets a lot of times do the complete opposite of what is the logical thing to do, right? If the interest rates go up, shouldn't that automatically make the dollar stronger? Well, if we think about it, the answer is yes. But the market, remember this, very important. The market is a discounting mechanism of future events, right? So it discounts the projections of what is going to happen in the future. We've seen the dollar index rise substantially. So has the move in the dollar index, is all of this already priced in? Meaning, are we sitting at a top? And the answer, in my opinion, is yes. And I think we'll get confirmation of that tomorrow. So I'm looking, if I just had to make a bias, I think I do have a long position I'm looking at in the dollar again, but that's a very short-term pop. I do think there's some risk in that one, but I'm looking long-term Aussie dollar, dollar CAD, New Zealand dollar to really have some Aussie dollar, New Zealand dollar to have a nice rise, dollar CAD to get beat up aggressively. And long term, my favorite position is like a short in the dollar yen. But I do think that this move is going to happen very quick tomorrow. So I actually think traders want to have on their radar for sure commodity currencies against the dollar. So you want to have those three on your radar. You want to have the New Zealand dollar, Aussie dollar, and the CAD, the dollar CAD on your radar. And you want to know, are we sitting at extensions? Are we sitting at U-turn areas? If we are, I can tell you, a brilliant trade setup right now is if we're sitting at like a U-turn area for Market Trader Institute students, you kind of know this. We're sitting at a U-turn area on a 60-minute dollar CAD. If we're still sitting there and we start to see structure start to break to the downside, I think there's going to be just a phenomenal amount of money made in a very short amount of time on tomorrow's announcement, regardless of whether they raise or not raise. I think it's going to be very bearish
Okay, and that's, I know you talked a lot about short term, and that's right after the announcement. Do you see this trickling off? Like, will this last for a while? Are there any opportunities that could happen, the day after, a couple of days after, perhaps for the traders who maybe have a day job and they can't, watch what's going on while the announcement's happening tomorrow?
Yep. Yeah, absolutely. And so it's understanding patterns, right? And it's understanding, trend analysis. I always say there's kind of 3 steps. The holy grail of trading really is, if you think about it, it's, you got to have a directional bias, meaning what is the longer term trend? You got to pinpoint your entries, and then you got to manage risk. And I'm a big believer in there's always a trade. It doesn't mean that it's a good trade. It doesn't mean that there's a trade at this current price, but there's always a level that, I'm looking to either buy or sell at. And so let's say we get a big move down in the dollar CAD, a really big, type of capitulation move down. Well, what that's going to cause is it's going to cause probably a shift in trend, because on a short-term basis, we've been in an uptrend because the CAD's so oversold and the dollar's been strong. So that's going to cause a trend shift, which should automatically flip people's bias to the downside. But there's inevitably going to be a retracement of that. And again, Market Trader Institute students understand this, is you don't ever want to try at the market. Let's say the dollar CAD is, you have a day job and you come and you see that the dollar CAD is down, 250 pips, and it's like just falling. You're like, I just want to jump on this thing and ride it. Don't do that. Wait for it to set in a true low, understand where your Fibonacci trend is, and then wait for that rally back, that retracement back. Because more times than not, in fact, almost every time, you're going to get some type of retracement back. And the reason why you get that retracement back is because institutions really kind of control where the market goes. And so if we get a big capitulation move down, there's inevitably a bunch of unfilled orders where it started to move aggressively down, a bunch of unfilled orders of people who wanted to get short, big money that wanted to get short. And so they're going to trickle this back up to really start structuring their short position higher. So, I think it's going to offer whichever direction, and that's important, whichever direction we move. Let's say the dollar CAD doesn't fall, but it rallies up. You're going to see a huge either move, and you're going to see a bunch of buying pressure. And that area in there is going to offer another great buying opportunity if we get back down there. Or you're going to see a big sell-off and selling pressure. So someplace in there on a rally back is going to provide another great opportunity. So, if you miss the first move, I think it's going to offer a couple opportunities. And I think whichever way we do move, I think we're going to move. Let me say this. I think if the dollar strengthens, so like the dollar CAD, if the dollar CAD goes up, I think it's going to be a short-lived move, just like in the dollar yen. I'm looking for a move, just so everybody knows. My 30, it's traded at 121.67 right now. And
is
so
that for the dollar CAD
124
that you're looking at right now?
No, the dollar yen.
Okay.
So, but I think the dollar CAD could be very similar. Might be similar to the dollar, so it might have this similar move. So, ultimately, in the dollar yen, what I'm thinking is, if we do get a bullish move higher, which I think we may get, I think it's going to be very muted and short-lived. And I think it's going to be an opportunity for institutions and smart money to get out of their positions and do what I said earlier, which is kind of dump their positions on the Joe Blow public, unfortunately. And then it's going to be a big move down. So long term, I see us popping dollar yen to 124.30, possibly on tomorrow's news. If we don't, then we're going to break the recent lows of like 120.50. And I see us ultimately going down to 110 or lower. So we're talking 1,000+ pips on the downside. So very similar move, I think, in the dollar CAD. If we do get a pop higher, which means that the dollar is strengthening, I think it's going to be I'll say it this way, any strength in the dollar tomorrow, I'm going to be selling. I'm going to sell all strength in the dollar. I'm also doing the same thing in my stock positions. Any strength in the market today, I'm selling into this rally.
Gotcha.
Same thing in the dollar. It's just, this is a little off subject, but, for those that are in the United States, those that might trade options and stocks, my favorite position in stocks and options. So my favorite position in currencies, I said, long commodity currencies, long the yen, longer term, and I think the dollar is going to get crushed. in my stock position, I think over the next 2 weeks, a phenomenal trade in stocks and options is short both the market and bonds. And the way you can do that is you can short the SPY, which is the S&P 500 ETF, and short the TLT. Now that's counterintuitive because as the market goes down, bonds should rally, right? The yield should go down, but that's not going to happen. It's going to be basically both bonds, and this is why it's going to hurt so bad this time, this big sell-off, is because both bonds and stocks are sitting at historical highs. And
can you hear me okay, Tyson?
That's just not a good recipe
Am I coming through
for the average person out there.
A little frozen right now. Okay.
Oh.
I got you now. Just wanted to make sure. Didn't want to cut you off or anything.
Did all that come through clear, or is my voice like breaking up? I know the video's
a little bit. I didn't hear the last part. That's why I was just confirming.
Oh, yeah. Just let me repeat it real quick. I just said my favorite position in stocks and options is short in both the TLT and the SPY. Short stocks and short bonds, which is really counterintuitive because bonds should rally if the market goes down. Bonds should sell off if the market goes up, and so or yield should go up. So anyway, so short TLT, short SPY is my favorite stock position, and I think that's going to be good for about 2 weeks. And then what I'm going to do is I'm going to take the TLT position off, and I actually think the SPY, the S&P 500, just so everybody knows, I have a long-term target of like 1260. So I think we're due for a really large.
Awesome. Well, hopefully you'll be keeping everyone updated on your Facebook page. We can stay updated with that, especially after the announcement happens tomorrow. So I know we've had like a really great discussion. We're coming to a close right now. So I just want to make sure that we give people a last opportunity to call in. You can click on the square. We can buzz you in. You can ask Tyson any of your questions personally. We do have one question from the chat box from Ches, and he said, Tyson, do you look to see which currencies are strong and weak before you trade pairs? And if so, how do you do this?
Yeah, awesome question. Yeah, it's actually it's interesting that question comes through because it's one of the techniques that I use all the time. And I actually have what I call kind of a scorecarding process. I've introduced it a little bit to Market Trader Institute students, and over time I'll introduce it even more. But it's really based upon everything that Market Trader Institute students use in their education, which is Fibonacci sequences, what's the trend, and really just kind of defining whether are we in an uptrend or downtrend. And here's what's really important to understand: just because we're in an uptrend doesn't mean it's time to buy, right? What we need to wait for, or what we need to know is, have we in this uptrend put in our retracement, or are we at a low? If we're in an uptrend, we're looking for a low price to buy. We want to buy when prices are on sale, right? So yes, I do use a scorecarding process, and I do this over the G8, the 8, the global 8 currencies, which consists of the dollar, euro, CAD, pound, Swiss, Aussie, New Zealand, and CAD. And I kind of compare them. I do a scorecarding process, and I find out which ones in an aggregate, which ones for a basket are the strongest, which ones are the weakest. And just so you know, I do this on a monthly, weekly, and daily basis. And my basket analysis shows by far the biggest strength long-term in the yen and the biggest weakness actually in the pound. So Joshua Martinez has just been knocking it out of the park with this pound drop prediction. I actually use a lot of that based on what I do in stocks too. And some former companies I used to own. I used to do a lot of sector analysis, and each sector, there's 9 sectors in the market, and so each sector has X number of stocks. So I would analyze the sectors, each stock in the sector, and figure out which ones are which ones are the strongest, which ones are the shortest, or the weakest. And then I do what's called a pairs trade kind of in stocks, whereas let's say the technology sector is strong and the energy sector is weak. Well, then I want to go long the tech stocks and short energies, or I want to go long healthcare and short materials, whatever it might be. Another pairs trade, just off subject a little bit, that I like in stocks is long financials, short utilities. So long XLF, short XLU is another good position. But absolutely, yes, I use a kind of an aggregate scorecard process to figure out what's the strongest and what's the weakest, and then I pair them together.
Awesome. All right. Well, if we have no more questions, I guess we can wrap up this session. Our first blab, it was pretty exciting. Glad we had so many people join us. There will be a recording available of this if you weren't able to attend live. Again, we would love for you to, because you have the opportunity to ask Tyson or Josh when he comes next time some questions. And what else? I know we talked a lot about MTI's education, and I know that's really helped strengthen your trading. And if you guys head over to our Facebook page, facebook.com/Market Traders Institute, we'll have some links for you guys to kind of see where Tyson teaches all of our students now, and, you know, what's really been working for him. I'll also be able to send you guys a link in the chat box for this blab as well, so you can check that out. And that's all I have. Yeah.
And if I could kind of second on that real quick, Kristen, you know, it's so important. One thing that I really want to make sure that everybody understands is, you know, I started out by saying this when I was kind of going over my history, and, you know, I mean this, like, this business is awesome, and it's really, it's blessed me in so many ways, which is awesome. But I've seen the mountaintops and I've seen the valleys in this business. And so if there's anybody out there that doesn't have education, please do not, none of what we said is advice, but please do not go out and think you can trade and invest. You should give your money over to the professionals. Now, I think if you're here, you have what I call the trader seed. And the trader seed is really simple. It doesn't mean you're somebody that has to sit in front of your computer screen and day trade all day long, but you're somebody who says, you know, I know there's a better way, and I know that I can, you know, outperform the market or protect my capital or whatever it might be. And that's the trader seed, and it never goes away. Take it from me. It never goes away. So the best way to do it is get education. Make sure you surround yourself with the best. This is one of those skills. It's a transferable skill. So it's one of those skills that, you know, you can watch myself, you can watch Joshua, you can watch Chief, Jose, you can watch us, and I've been around the block, and we are the best in the business, in my opinion. I've seen, and I'm friends with a lot of really, really successful traders, and I'm very, very happy to be with Market Traders Institute. But here's what I would recommend. Find the best. You have found the best right here, Market Traders Institute, and then get education. Get involved as much as you possibly can in stuff like this in our webinars. And then over time, you're going to start to mimic what we do. You'll learn from our experiences, from our failures, from our successes. And over time, this business becomes everything what you think it can be. It can provide you with an amazing lifestyle. Just have realistic expectations and make sure you do it right. And to do it right is to do it with education. And I think a lot of people, I know I'm talking a lot, but I think it's important. I think a lot of people tend to forget. This business offers, you know, for example, I mean, I could see us getting a, you know, 300 pip move in, you know, the pound dollar or the dollar on one contract. You know, that could be a $3,000 move. If you're a multiple contract trader, that could be a $10,000, $20,000, $30,000 day. If we think about the amount of money that traders, successful traders, can make, it's doctor level, it's CEO level, it's more. And we understand, everybody understands, to be a doctor, I've got to go get 8, 10 years, 12 years worth of education. To be a CEO, I've got to get my MBA or my doctorate. Sometimes we forget, wait a minute, to be a trader, I think I could just, and this is actually a bad thing. All I got to do is open an account and have some money. Please do not do that. Get proper education, and it can be the most amazing thing you've ever done. If you don't do it with education, then, you know, I say it all the time. I mean, you probably don't have enough money or enough time to do it without education or started. So I really, if you are not part of Market Traders Institute, if you have not come to some of our free webinars, if you like what you heard, you know, from me, if you kind of, hey, this guy kind of fits my style, I'm very similar to all of our traders at Market Traders Institute, then I'd love to help you. You know, I mean, that's really why I'm
yeah, absolutely. So. And just to touch on what Sevilla said, she said maybe create a play account before jumping in, a demo account. Absolutely. I know that's something that Josh is very adamant about. And it definitely helps you get a feel for the market and practice. So yes, that's something you can totally do. Especially, it's all about feeling comfortable, and it's all about making it work for you in your own way. You know, I was telling everyone earlier before you jumped in, how I oversee all of our social accounts, make sure you guys are answering everyone's questions, making sure all of the content that you guys post is on point. And I can't tell you guys how many of our students that I see that are just absolutely killing it right now. And it just makes me so happy to see their success. Yeah. I mean, we have a Facebook group for all of our students, MTI Family of Traders. And one of our students in particular, Samson, he's out in New York. He is just doing phenomenal right now. And he's out there wanting to help other traders, wanting to help others who are interested in becoming traders by creating and posting his own videos. So yes, education is important. Definitely having a mentor to learn from their mistakes and to learn from their successes is definitely huge. But just to see the community of traders that we have, because I mean, as a trader, you're in front of your computer, you're looking at charts all the time. You know, you're not like in an office with everyone or working outside with other people, you know, so it can get a little lonely. It can get a little isolating. And to see an online community form with everyone who has the same interest and with everyone who's willing to help each other is just something so awesome right now. So
it is awesome. And, you know, we always say we never leave a student behind, never leave a client behind. And again, I've kind of been around the block in this business. If there's a way, a place, a style to trade, or you know, a company out there, I've probably been with them or reverse engineered something, but I've never been with a place that really, and there's other places that care, don't get me wrong, but I've never, we put on so many webinars and we do everything we can with that. So I'm really proud to be with Market Traders Institute. So.
Me too. So yeah, this has been great, you guys. As I said a little bit earlier, I will post the link so you guys can find out a little bit more about Tyson, a little bit more about market traders, keep up with the FOMC that's going on tomorrow. We'll definitely have several posts going out on our Twitter and our Facebook. And that's all from me. So any last words from you, Tyson?
Awesome. All right. I think I'm good. Thank you, everybody. You know, look forward to helping you more in the future, and hopefully we can do this again. I enjoyed this. I think it's really important for people to kind of get to know us on a personal level instead of, you know, talk about trades and talk about charts, but you also want to know who the person is. And so, yeah, this was awesome.
Yeah, absolutely.
Thanks so much, Kristen.
Yeah,
this was a great time.
Thank you. All right, guys, we'll see you soon.
Thanks.